Thank you, gentlemen, for joining us. I have a series of questions. They will begin now. We have 30 minutes. These gentlemen are very busy.
This is very formal, Bill.
Well, we were just talking about how I used
By
to
the
be
way,
a
I need
litigator.
like a TV tray here in front of me. Sorry, all my stuff.
We'll bring one up. As Vice Chair of the House Financial Services Committee, Congressman Huizenga, I'd like to start with you. This panel is about Wall Street and blockchain and some convergence. You've been on House Financial Services for a while. Your time before elected office, familiarity with the capital markets. How do you view blockchain and capital markets colliding? What do you view as to the destination, where we're going with sort of introduction of this new technology to a already very complicated, very technically sophisticated system like the U.S. capital markets?
Well, first of all, good to be with you. Appreciate it, and good to be here with Dan as well. Yeah, you picked the word, and I'm not sure if this was a conscious decision or not, but you used the word colliding. And I hope it's more of a melding rather than, I guess in my mind, I'm a football fan, so I hear the word colliding and I think of it bouncing off of each other, or one has to overpower the other. I really hope that this is a moment that we're going to be able to look at how digital assets are going to enhance rather than replace any kind of capital markets. Is it going to change capital markets? I think that's probably a reasonable assumption that there will be changes, but every time there's innovation, there's always change, and as it should be. I'm pretty sure that we no longer want to be sitting around an actual ticker tape looking for what's happening on Wall Street. We have to be innovative, and this is where the United States has got to be very careful about making sure that we create that atmosphere that's going to allow innovation, that's going to have investor protection, but also puts us on the front end of this, or front edge of this, and on the front foot rather than on the back foot.
Do you have any just initial impressions about, or gut feel about, one of the central, I guess, themes that you find in digital assets, or what sort of colloquially we call crypto, is putting power and access out to the edge rather than keeping it, having centralized intermediaries, having things gate-kept. It's a different way to run a capital markets, to have access and agency out at the margin, which manifests itself into something that you used to need a sort of a centralized platform for. Maybe you just need an app, you just need an interface, and what the average retail person may have access to is going to look going to look potentially very different 10 years from now than it certainly did 10 years ago. Is that decentralizing aspect to it? Like, I would think that we need to be cautious in terms of how we take our traditional rails and introduce such elements to it. Would you agree?
Yeah, which is why I think we have to think innovatively, not just within the technology, but within the regulatory space. That, I think, is certainly my goal in that, saying, okay, this works in a status quo situation, but maybe doesn't work if we are moving and expanding beyond that. So, again, I think there's some general principles that should hold true. Self-custody is one of those in my mind. So, for example, having the ability to empower the investor and the consumer is something I think in general society is looking more towards, not against. As you look at other areas of society. So I think, again, we've got to balance that investor protection, but also foster the innovation, which also means then bringing products that consumers are actually looking for. And you'll hear in committee concerns about gamification and things like that. And I literally at one point sort of rhetorically said, well, how many times does it have to bing or have confetti fall for it to look like a game for you as opposed to something exciting that my kids which are age 28 down to 19, are wanting to get interested in, right? And of course, you can't have an actual definition of what that gamification is. I think that's just more of a red herring oftentimes. But we have to make this approachable for multiple generations as well.
Yeah, I agree. I think other countries are trying to come up with artificial thresholds for things like bings and confetti and whatnot. I actually do think it puts the United States at a tremendous advantage that we're not going down the road in that way. Congressman Goldman, you voted for crypto bills, you voted against crypto bills, you voted for clarity. And genius. And so let's start with clarity. What about clarity? Because I'll have a follow-up question just about voting pattern, because I think it indicates you looking very closely at specific bills rather than just the category, the topic generally. But what about clarity struck you as a bill that needed to pass the House?
Well, Bill and I agree a lot on what he just said. And I think that's actually very important for everyone to remember. We're on opposite sides of the aisle, but we both support growth and innovation, and we both want to protect the consumer and protect the downside. The way, when I got into Congress 3 years ago, I was not as familiar at all with crypto. I had been a prosecutor, I had done securities and commodities enforcement work, but I didn't even realize that I actually do represent the crypto capital of the world, which I like to remind my California colleagues. And so it was really Fit 21 that was coming through, and that was the first time I started really engaging in it. And I didn't understand why there were people out there, generally in my party, who seemed to want to kill crypto. And I thought to myself, wait a minute, we didn't kill the internet in the 90s. What we need to do is regulate it. That's how we foster growth and innovation. That's how our economy remains the best and the most innovative in the world. But regulation is how we're going to protect the downside. So generally speaking, I am a proponent of regulation. I think clarity is imperfect. I personally am very concerned about the gaps in DeFi. I think there are gaps that folks are taking advantage of right now with speculative companies and investments that are creating a bubble without much behind it that is going to cause some pain at some point. And I actually remember I talked to Bill about this. What can we do? Is there anything that we can do on this? And I think the general view was DeFi is a little bit different, and we ought to regulate it, but we should do that separately. And the rest of it, I generally supported. I think we do need regulation, and I think we also need to be facile and flexible and adjust to not only the new technology, but the new ways that it can be used, both for good and for bad. And so that was really the impetus to support clarity, and I want to keep working on it because the system is imperfect, and there are parts of it that need more attention right now. I am super excited about blockchain technology. The possibilities of blockchain technology throughout our entire, not just economy, but our entire society is very exciting. And making sure that we're using it and the transparency of it, but while also the protections and the security that you get can revolutionize how we do day-to-day transactions.
I have a follow-up related to your home district, but before that, I'm going to jump the order of questions here and talk a little bit about DeFi. It seems, at least in the Senate, a big hang-up are questions about DeFi, questions about how to handle illicit finance in a disintermediated ecosystem. Perhaps some of these players need to serve as intermediaries. Perhaps we give them obligations under current or even new law in terms of monitoring, being able to freeze funds, being able to interdict when there's bad actors acting on chain. how do you see this resolving itself? Do you think we see less discussion of these concerns on the House side or in House Financial Services? I think there's a big debate in Senate banking on these points and perhaps more broadly. Do you have any prognostications about how this debate evolves over the course of the forthcoming months and ultimately resolves itself?
Well, everybody, good to be with you. We're out at this point.
Oh, look at the time.
Yeah, look at the time. Look at the time. Oh, we still have 10 minutes. Okay. Look, the question I think in my mind is probably not an if it resolves itself. It's a how it resolves itself. Because as I'm looking at this, there's going to have to be some type of resolution. Now, what I don't know is that some sort of agreed upon, quote unquote, compromise, or is it going to be one view winning out over the other? I will tell you that my civil libertarian wing flaps a little harder on this one than some of my other colleagues. We rightfully have concerns about anti-money laundering and knowing your customer and all those elements of law enforcement and regulation that battle illicit things. I won't claim originality on this, but this gets talked about a fair amount. You want to know what the most anonymous, autonomous, and secretive way to make any of those transactions happen?
Cash.
Use cash. Exactly. It's cash.
We all knew the answer.
So, the Republicans back when we were going through Fit 21, this is under Patrick McHenry, and we were actually in the minority at that point, as we were leading into that, we developed a principles statement that talked about, in our view, and my view, I agreed with this, we had to have that as part of a self-custodian, having autonomy, having it anonymous, having it as much of it as possible, needed to be central tenets of whatever regulation that we were going to be pushing through. And we've got these kind of push-you-pull-me moments where we've got law enforcement that would like to know every single transaction, and we've got the extreme of it maybe being China, but we don't have to go as far as China. I happen to chair something called the U.S.-Canada Interparliamentary Group, the IPG, and it's the official exchange between U.S. Congress and the Canadian Parliament. And just last week, I had a conversation with a couple of my Canadian parliamentarian friends who are very concerned about what the Canadian government's doing to their own citizens when it comes to this exact situation with bank transactions and those kinds of things. And so, we can make it all about China, but there's a lot in between where we're at and where China is that gives me concern. So, at this point, as we're going slower, I would fall on personally, I would fall on more of that cautionary side, and then let's figure out how we're going to be able to move towards a system that maybe makes more people comfortable.
So, Congressman Goldman, your district includes Wall Street proper. From my vantage point in the blockchain ecosystem, we're seeing a lot of interest, efforts to build into and incorporate more digital assets, whether blockchain as a technology that sort of constitutes a new infrastructure, or digital assets and as offerings. Do you hear from your constituency how Wall Street is starting to engage with digital assets more earnestly? I believe Circle just moved into your neighborhood.
Yes, welcome.
You may have been to Pub Key. I think that's in Greenwich Village. But do you hear from the traditional Wall Street institutions and do they have any? Are they sort of taking a stand and having a voice in these blockchain and digital asset debates?
For sure, increasingly, and we're starting to see a lot more of the larger firms starting to get more engaged, which comes on the heels of actually having regulation that that they can work around, and that's why it's so important to have a baseline system. The opportunity with stablecoin, I think is really outstanding, right? And it's, when I talk to my Democratic colleagues, I'm talking to them a lot about how, as Bill says, if you're transferring cash, you've got a 10 to 15% VIG from Western Union, and it takes several days. If you're trying to get access to US dollars and you can do it through stablecoin in the Amazon forest, that is giving so many unbanked people access to our currency, which is good for the United States economy. And so there are real unique opportunities, and that's part of the reason why you are seeing Walmart and Visa and so many become interested in it. The concern, I come from a law enforcement background, so I might have a slightly different view than Bill does here. And look, when you're transferring cash, yes, there are ways of doing it, whether it be Western Union or Hawalas, but it's really hard to transfer huge sums of money by cash. But you can, in theory, do that with stablecoin. And so what I worry about is, even if you are tracking or you're able to retroactively go back and figure out what illicit activity has occurred, if you are unable to freeze the funds at the point of transaction, it is going to be very hard to get them back. And that is going to make the system much more fragile and more dangerous. And so as we are moving forward and balancing the stablecoin with other cryptocurrency and other digital assets, I am very concerned that there's just been this explosion of meme coins and sort of the underbelly of the crypto industry that's taking over a lot of the attention, that is undermining democratic support for crypto, and that I think everybody in this room needs to be very conscious of. You may get terrific or regulation or lack thereof from a Republican president who's deeply invested in crypto, and a Republican Senate and a Republican House. But if it is overwhelmingly one-sided, it is not going to remain that way. And certainly when I talk to all the different companies in my district, what I hear most is, just give me some settled expectations. Give me some stability so that I know what the rules are. They're not going to change every 4 years, and I can then work within those parameters. And those are the good actors, right? And those are the ones we want to encourage, who understand the value of regulation, want it, embrace it, just want to know what the playing field is. And that's why I think that working on this, and I think that building in some of the traditional financial enforcement models for crypto makes a ton of sense, whether it be anti-money laundering, KYC, some of those basic ground rules. We don't have to reinvent the wheel. We know how to do it, and we can apply it at potentially a much more decentralized port of entry point, that with the technology, so that that is actually achievable.
Yeah, do you mind if I jump in? Because I think we're talking about the different sides of the same coin, frankly. I think we're very close on this. What I don't understand is some of our colleagues, and we've got a couple of them on the Republican side as well, but I won't name any names on either side, but what I call is we've got a group of people that are digital deniers, right? They're just sort of like, this is a flash in the pan, it's not going to be around. You say it's going to be transformative, it's really not. It's really a way to screw the customers. It's really a way to, game the system. Well, that's one of the reasons why because I want to make this less of the wild, wild west, I would like to have a market structure put in place. Stablecoin was the very, very important first step. We've got to have a marketplace set up with rules of the road, especially so those larger players who are going to be less risk adverse, they just have more compliance lawyers yelling at them, That was meant to be funny, but apparently there's a few compliance lawyers here. So
That's as loud as compliance lawyers
as,
laugh.
as loud as the accountants say they can laugh. Yeah, right. Yeah, that too is supposed to be funny. But anyway, we've got to look at how we maintain that balance, but allow for innovation. And with innovation comes risk. And if we're going to squeeze all the risk out of a system, we're not going to be innovative.
You've been overseeing the SEC for many cycles now. A number of different chairmen, at least 3, including the current one that has talked a lot about digital assets. Chair Atkins, who's going to be here shortly and hopefully talking about this issue directly in breaking news, if we're lucky. He has made Project Crypto like one of the pillars of his agenda in speeches and also through opportunities with Commissioner Peirce, like we had yesterday. We're starting to get the outlines of a regulatory structure that the SEC at least is going to roll out and you can get feedback on. It's going to involve perhaps safe harbors, exemptions, delineating certain types of products and offerings which are outside the scope of the securities laws, and then seeing whether that market structure advances the ball, which I expect it would. What are your impressions about the way the chair has been conducting affairs so far and how the crypto task force is going? Because I think it's going to play a dramatic role whether or not we have a market structure bill. So as overseeing them, what are your impressions?
Yeah, I've actually sat on the Capital Markets Subcommittee since my second term. I've been on the Financial Services Committee the whole time, so it's been 13 years, Mary Jo White, then Jay Clayton, and then of course Gary Gensler, and now Paul Atkins. And I think, look, I had some issues with where Jay was coming from. Clayton was coming. He's my party theoretically, and I've got a very, very good relationship with him. I actually had a reasonably good working relationship with Gary Gensler as well. But I think on digital assets, everybody has been evolving on this. I found it more difficult dealing with Gary Gensler, who obviously famously, as CFTC chair, declared all crypto a commodity, and then of course when he became SEC chair, magically turned all into a security. And how I describe it is, look, these things are more of a platypus than fish or fowl, right? It's got characteristics of both, and how do we move forward with that? Jay, I thought, was probably less, I'm going to say pro-crypto, but I don't know that that's fully encapsulates what I mean by it. Maybe he was more cautious than a lot of people within my party were in the first Trump go-around, and even, in fact, even the Trump administration itself writ large, maybe he was more reflective of that. Gensler, I think, reflected the stalemate that was really within the other side of the party, and whether it's those digital deniers and then those that really truly are forward-thinking and innovative, and we've got a number of them on our Financial Services Committee and sprinkled throughout the committee on the other side of the aisle, or the other committees as well. It seemed like we had sort of hit a stalemate. Paul Atkins, I think, has now had the benefit of watching all of it and is going to come in with a very different attitude. He and I have had a couple of conversations already about this. I'm very excited about the direction that he's going to be going. I know consumer protection will be part of this and sort of reign supreme. It's going to be, he takes the SEC's role very seriously, yet he's also very serious about the innovation. So I think now is that moment where we are going to see the most advanced conversation and discussion and hopefully regulation when it comes to this. I think to Dan's point, though, we've got to make sure that this is cemented in and hardens so that everybody, whether it's a large organization or an individual, knows the rules of the road, rather than this just being, inputting, and it's just going to get moved back and forth depending on who's in the White House.
And I would just add real quick to what Bill was saying, part of why I started really digging into this is because of the definition of whether it's a commodity or a security and what falls into which category. If you are viewing every single crypto transaction as a security, you are killing the industry. And that's how I really got interested in it, because I had experience with both the SEC and the CFTC. I understand the turf battle, but what I worried about with Gensler and some of the other leaders in my party on this issue is that we're making the exception the rule. And I certainly looked at Sam Bankman-Fried and everything, and my background, I was like, that's just a fraud. It doesn't, yes, it related to crypto, but it's just fraud. I actually charged the first crypto fraud case ever in the country back in 2016, I think it was. And it was a Ponzi scheme. It happened to deal with Bitcoin, but so the idea that there's this new technology that is just going to absolutely destroy the consumer, I think is a red herring. But there also needs to be strong disclosure, strong regulation, strong enforcement. And what I really worry about right now, and I know it's sullied a lot of the sort of those who are pro-crypto regulation in my party, is the gross abuse of official power to benefit from the crypto industry. And that in a time when we're trying to figure out market structure, when we're trying to lay the groundwork and the foundation for a really exciting new technology, that is very unhelpful. And Chair Atkins has a almost impossible task if he, I think, wants to do this right, which will be to put more restrictions on the president than the president wants. And we've yet to see that happen, so I will remain, I'll watch.
So just quickly on that, SEC enforcement noticeably quiet on the crypto front, other than in cases of clear Ponzi schemes and other blatant securities fraud. While a regulatory regime is fleshed out, is that the right approach, speaking as a former prosecutor, wrong approach? Should we just give them the benefit of the doubt while they're trying to get their, and history will tell us whether it was right or wrong? How do you view that?
Look, I thought Gensler's enforcement by litigation was wrong, and I think no enforcement is wrong. And if it means that there have to be some stopgap measures using the sort of nuts and bolts of our financial regulatory industry, then we should do that. But the speculation that is going on right now is dangerous. It is in many ways, to me at least, reflective of the dot-com bubble. And that is not helpful. There are a lot of people out there who are viewing this as a get-rich-quick opportunity. And that's really bad for blockchain, because blockchain as a technology has never-ending possibilities and is very coherent and can be very structured. But when you have this other speculation, and most people don't understand the difference, that's problematic. And so my last recommendation for all of you: change the term crypto. We need a new name.
That ship has sailed. Off topic, last question, off topic or on topic? What do you prefer?
I'm open book, whatever you want to talk about.
All right, we'll get nerdy. If the Supreme Court says that the president can remove independent agency directors, what, if anything, does Congress do or say about it? Nothing? Because the argument was just held in the Supreme Court yesterday. Yeah. Probably a 6-3 decision that the president does have that inherent authority not to upend the agency, but just to change the leadership.
I think it begs the question of whether independent agencies are actually independent. when they're appointed by a president, if you really were looking for independent agencies, would it need to look like a congressionally driven appointment or nomination? I think we've certainly had challenges with these quote independent agencies that have not necessarily been reflective of where, I don't think necessarily where a president is, but where maybe sometimes society or certainly where Congress has been. If you take the idea that we are the reflection and the representation of society as at large, we get ignored on a regular basis by these independent regulators.
I think the risk is that what will happen is there'll just be a lot more Senate confirmed positions. And I don't know that that's good, given how hard it is.
Or whether it's going to actually happen.
Well, that's true too.
They just don't do that. Right?
Yeah, no, and that's the point. I mean, they can't even keep up with the number they have now. And that system seems to be teetering on the edge of being broken. So, I think with all these things, be careful. Be careful what you sow, because you may reap it.
Please join me in thanking the Congressman for joining us today.
Thanks, everyone.
Thank you.